What if the next big crypto crash doesn't come from a chart pattern, but from a regulation bombshell dropped from the highest levels of global finance? Today, we're not talking about technical analysis or market sentiment. We're talking about a chilling warning from the G20's Financial Stability Board, one that just called out significant gaps in global crypto regulation. Their message is loud and clear. The system as it stands isn't ready. It's not prepared to handle the risks of stablecoins, cross-border transfers, or the next massive wave of institutional adoption. And if they're right, this isn't just about some new compliance paperwork. This is about a potential shock that could rattle the entire crypto ecosystem to its core. Forget the charts for a minute. This is the real story you need to be watching. So what exactly happened? The Financial Stability Board, or FSB, isn't just some random think tank. This is one of the most influential regulatory advisory bodies on the planet. Backed by the G20 nations, they are the architects who guide how countries build their financial stability frameworks. When they speak, governments listen. And their latest statement? I'm quoting here. Regulation across nations remains fragmented, inconsistent, and insufficient to manage cross-border crypto risks. That's a huge deal. Why? Because crypto, by its very nature, doesn't care about borders. A transaction can hop from Tokyo to New York to Berlin in seconds. But regulators? They care a lot about borders. And this disconnect between a borderless technology and a bordered regulatory world is the heart of the problem they are pointing to. This isn't just a suggestion, it's a formal declaration that the current global approach is broken. This brings us to the core issue. Fragmented regulation. Imagine a soccer game where every player is following a different rule book. That's the global crypto space right now. The US is still stuck in a turf war, arguing whether the SEC or the CFTC should be the primary referee. The European Union has its comprehensive MiCA framework, which is a great step, but it's still in the early stages of implementation. And Asia? It's a complete patchwork, ranging from countries like Hong Kong that are pushing for innovation to others that have imposed heavy restrictions or outright bans. When regulations are this inconsistent, two dangerous things happen. First, bad actors have a field day. They can exploit loopholes, jumping from one jurisdiction to another to avoid scrutiny. It's a game of regulatory arbitrage. Second, and just as important, legitimate companies that want to do the right thing struggle to scale globally. How can you build a worldwide platform if you have to navigate dozens of conflicting legal frameworks? The FSB is essentially screaming from the rooftops. If we don't fix this fragmentation, the system itself will eventually crack under the pressure. And the report singles out one specific area as the biggest weak spot, the potential epicenter of the next big shakeup. Stablecoins. Think of stablecoins as the plumbing of the crypto world. They are the pipes through which billions upon billions of dollars flow every single day, facilitating trades, powering DeFi, and acting as a bridge between traditional finance and the digital asset space. But here's the catch, the scary part. This critical plumbing system doesn't have unified oversight. Many stablecoins lack transparent, regular audits, leaving us to wonder if they are truly backed one-to-one by the assets they claim to hold. And if a major, systemically important stablecoin were to fail, the shockwaves wouldn't be contained to a single country. We all saw what happened with Terra USD, and that was just one algorithmic project. Now, imagine a major asset-backed stablecoin depegging on a global scale. The FSB is warning that this isn't a hypothetical risk. It's a ticking time bomb. You might be asking, why is this warning coming out right now? The timing is anything but random. We are at a critical juncture in crypto's history. First, institutional money, the so-called smart money, is finally starting to warm up to crypto in a serious way, with ETFs and major financial players entering the scene. Second, global transaction volumes are steadily rising, meaning the scale of the risk is getting bigger every day. And third, geopolitical tensions are high. Governments are becoming increasingly protective of their own monetary systems and are wary of any technology that could challenge their financial sovereignty. When regulators see these three trends converging, they start using words like systemic risk. In their world, that's the final alarm bell. It means they believe crypto has grown large enough to not just have its own crisis, but to potentially trigger or amplify instability in the broader traditional financial system. And when regulators get worried about systemic risk, they don't just write reports, they act, and they often act fast and decisively. So, what does all this mean for you and me, the everyday crypto investors and users? In the short term, brace for impact. Expect a flurry of regulatory announcements, more intense investigations into stablecoin issuers and exchanges, and a massive push for stricter compliance. The days of operating in a gray area are quickly coming to an end. In the medium to long term, this will create a clear divide in the market. On one side, you'll have projects with strong compliance frameworks, crystal clear audits, and transparent governance. These are the projects that will likely attract the lion's share of institutional capital and become the blue chips of the new era. On the other side, unregulated or purely offshore projects might face serious heat. They could be cut off from major markets, delisted from compliant exchanges, and find it incredibly difficult to operate. The market is about to be separated into the regulated and the rogue. But here's the crucial flip side. The opportunity hidden within this chaos. Every major regulatory crackdown in financial history, while painful in the short term, has ultimately made the market stronger and more mature. Think about it. The dot-com bubble burst led to the rise of today's resilient tech giants like Amazon and Google. The 2017 ICO purge, which felt like the end of the world at the time, cleared out the scams and gave rise to projects with real utility. And this coming wave of stablecoin and exchange regulation? It could be the very thing that finally paves the way for safe, mainstream mass adoption. The projects that navigate this storm, that embrace transparency and compliance, won't just survive. They could become the foundational backbone of the next and potentially largest bull cycle in crypto history. This isn't the end, it's a crucible. This isn't just another headline to scroll past. This is a direct warning shot from the highest echelons of global finance. Regulation isn't a question of if anymore, it's a question of how soon and how strict. And those who understand this shifting landscape won't just survive the coming storm, they'll be the ones who capitalize on it. If you want to stay ahead of the curve with daily crypto breakdowns, no hype, no nonsense, just the truth, make sure you hit that subscribe button, give this video a like, and turn on notifications so you never miss an update. The storm is just beginning, and you'll want to be prepared.